In this video, learn how to spot the stocks you should stop trading. Hi, I'm Mike Bellafiore, co-founder of SMB Capital, and we're a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade, and the playbook. In this video, two firm traders identify a stock they should stop trading in real time. Most importantly, they explain why they should have stopped trading this stock. Let's get to work on sharing these important trading lessons so you stop needlessly losing money.
So we're going to be watching a tape from Logitech from yesterday, their day after earnings. In just a quick synopsis of the earnings, huge beat, blowout earnings, crushing EPS, beating on revenue, which was helped by the pandemic. And going into the day, it was gapping up to an all-time high and gapping up about 7 ATR. And just to mention before we start, just showing this tape, it's a trade where I made some mistakes and it wasn't a good trade, but trying to really focus on how I could notice when something's not trading clean and just how to move forward to avoid getting chopped up in stocks after earnings, similar to Logitech. You want to add anything, Matt?
Yeah, I'll add in another major mover for the stock was JP Morgan, one of the major banks, had a price target upgrade as well from $70 to $100 due to the major revenue of over $1 billion for the first time. And then also to build off what Tim said, yeah, this reading the tape session won't be a really well executed trade. Rather, it'll be a stock that was tough to trade and a stock that a couple of us lost money in. And we kind of want to point out the variables of maybe why it was a tough stock to trade, what should have been some warning signs that maybe this wasn't where the best opportunity was after seeing how it reacted off the open, and just really looking at the variables that made this a difficult trader so we can identify that in the future to find better opportunities to trade, since there's going to be a lot of things moving right now, especially going into earnings season, multiple major name companies reporting earnings a day now with major gaps. So really keeping our eyes for better opportunity and noticing when we're not seeing it in real time is just as important as noticing the best trades.
So Matt, you're looking to spot stocks that you should not trade, that you should move around, that you should move away from so you don't lose as much money?
Exactly. A stock that might not end up having the move you were looking for, and then kind of when they get stuck back in a range or something like that, just kind of moving away, because if it's not doing anything you planned for, you don't want to force your idea on the stock or for things you weren't prepared for, but rather look for other opportunities that might be setting up a lot cleaner. Something trending outside of a range is often very attractive as a day trading vehicle. So when we see something really stuck in a range off the open, waiting for that to break out either way is often another good principle, and that's something we'll look at in this tape. It really can't break either way after looking like it may multiple times, trapping people both long and short and wicking many people out before the real move was made, like a half hour into the day.
Good, and as you guys are developing, very useful exercise to create some of the patterns that you just shouldn't be trading. They're just too hard. They're not worth your attention. They're not worth your intellect. They're not worth your capital. They're not worth the firm's capital or your account capital. And they're not worth your emotional capital. They're not worth your intellectual capital. They're not worth your capital, and they're not worth your emotional capital. And if you can start to spot, so lots of times people say, well, I want to eliminate my bad trades. Okay, well, what does that mean? I want to eliminate the trades that aren't working for me. Okay, so what does that mean? I want to trade more of the patterns that work for me. Okay, so what does that mean? Well, it means being able to spot in real time stocks that aren't moving well, stocks that aren't moving well for you, stocks that aren't going to move well, so you can go spend your time on something that is. You're going to develop skills that are going to lead to making money. Applied on the wrong stocks, you're not. So I really like this exercise here. All right, let's get to it.
All right, so we're going to start it up, and we're going to see this 94 level on the open, and it's going to be showing strength. Just to mention, extremely in play, 185 R vol, and it was doing like 76% of its average daily volume first minute. So here we go.
If you want to learn 3 real-world setups that our traders use, including the simple setup that we teach all of our new traders and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing right now at the top right-hand corner of your screen. That's going to open up this free registration page in the new window, so don't worry, you're not going to lose this video. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
So really what we're going to show off the open is how many prices this really touches. On the chart you see some inflections at $94, and then that like $95.50 area is another major inflection area. So we want to watch how it acts around those prices and if it really respects any of them. And what we're going to notice in this tape, you can keep playing it, is that these levels won't be cleanly respected. Instead, they'll kind of leak through both ways and give a lot of knee-jerk reactions, making it really tough to manage your risk.
Yeah, so like you said, right off the open, we're up almost half an ATR. Stock's showing strength from that 94 level.
Exactly. Yeah, it looks strong. Thinking, all right, it should hold this 94 level if it pulls back and starts to consolidate, which we start to see here. And you can see it just quickly gives out. There's just no hold at $94. Those buyers are probably out now, and we're getting back into this kind of choppy range down to 92.50 where there's just a lot of volume being done.
So to me, not holding that 94 is a telltale sign that it is now weak with that dropout. So what I'm thinking for a setup for me is to short a possible retracement now. If we can get a move back to like 93 and then risk that 94. But we'll see why that doesn't work.
93, like 10 is also the VWAP area. That's what that purple line is. So VWAP is often used in this opening like 5 minutes as a level, because sometimes the levels haven't fully developed yet and people are looking for things to trade off of to monitor their risk better. So we're thinking again, if this is really weak, it should bounce there, continue to the downside. Looks like it's making a new low here. You can see you even put your cursor over it, seeing that.
Yep. Drops out.
Quickly give out. So it does.
Still not involved or anything here, but we're going to see that it's going to fail to hold below this 92 level, and we're going to get a retracement.
Exactly.
So looking back on the review, that first retracement could have been good, but unfortunately, I was watching, which is
There's not enough time there. Tim, it's not enough. It's not enough time. Too steep, not enough time. Needed it to go sideways a little bit more to have a safe entry.
Yeah.
Maybe you could have scalped it, but that's at most.
So then we're hoping if this is going to be weak and actually trend after all these rejections, it should probably hold like under 92-ish. And you can see it just kind of pushed right back up through that level and is now holding it.
So I'll just mention my first trade, and we'll skip ahead, Matt, to I think where you got involved after. But so we get this second retracement here at this 92 level where it just broke down from. And then I got short, risking now 94. And at first it looks like it's working decently. It's going to chop around this 92 level.
Yeah. My trade in here was I thought there could be a dip and rip setup when we were really slowing in these 9160s. And when it picked back up over 92, I actually bought like 92.10 right around this time. Kind of expecting it to hold this 92 level. My stop is like 91.50 or like that wick low. So if it makes a new low, I'm out. And we're going to see soon here it gets back under 92, quickly wicks, makes a new low, and then comes back. So it stopped me out for my trade there when I was trying to buy the bounce, as it didn't really hold that 92 level, which it initially looked like it was.
Yeah, just for us to both have theses for two different sides of the trade kind of shows you it's up in the air.
Definitely, yeah, with so many drastic movements at both sides of the range without really breaking out, it just shows this there's a lot of accumulation on both sides, and it's really going to need some time to develop a clean pattern or trend. Otherwise, it's going to be easy to get chopped up like we do here, especially if you're hitting breakouts or breakdowns, which are more likely to be able to happen in like the first 5-10 minutes of the day. Those are probably the best times to be hitting those momentum trades, so when those aren't following through, it's the easiest way to get chopped up in opening drives.
Yeah, definitely. And the spread is one thing to mention as well. It does get
So,
spready on this.
yeah, right here it gives out, and that's what stops me out when I was long. Kind of saw the 92 not be able to hold, makes
Yeah,
a
it
new
looks weak
low.
again.
Yeah, I'm thinking this looks weak. Tim's feeling good about the short.
Just took off a third as it broke to a new low. And it looks like it's working for me. And we're going to then see the retracement.
One thing about this is that there's not a lot of time that's gone by. It's pretty far away from VWAP. You could snack back to VWAP, still be pretty weak. So your prices down here are a bit precarious. Oh, sorry. I didn't actually know that it was going to do that.
It's gonna pop all the way to like high of the morning, like 94.50. So pretty tough one to be building into anything short when not enough time has been spent, and things of that nature.
When I'm watching a stock like that, that is what I would be thinking, which is not enough time has gone by. It's still pretty far away from VWAP. It's still far away from, you know, an inflection point it could find where buyers and sellers come together. It's still a little bit extended to the downside. So you have risk that it can just pop and find that equilibrium and then do some buying and selling and then figure out where it wants to go from there. And that price can be pretty far away from those lows of day.
Yeah, and I think it's also important to remember the news on this was very positive and kind of a fundamental shift. So people could have really been accumulating, so pushing a short on such a high gap up to all-time highs can definitely be a tougher trade.
Yeah, definitely. So just kind of like you mentioned, Mike, we're about to get this pop to VWAP where I was thinking of adding to the short, and then it'll quickly blow me and stop me out, blow me away from the trade because it's going to go right through it.
So yeah, at this point, it now looks like we've broken out of the top of the range, broken out of the bottom of the range, and now we're right back kind of in the center of it. So it's really easy to get caught on either side of that with too much conviction if you're not really letting the time and volume show you the bigger picture.
And then I would just say one mistake I made is at this 21 EMA, I didn't think we were getting to VWAP. It looked like it was getting held up there, and I added short just now to quickly take it off when it breaks through 94. Everything was risked to 94, but just a lack of patience.
Yeah, now it looks like a classic dip and rip setup. It's like, okay, it pushed off the open, yeah, then got accumulated, couldn't quite break down, red to green, big move holding VWAP. And then this pullback's just really steep for what you'd expect if it was strong and reversing, but definitely thinking a little bit more on the long side here. But you want to see it really hold over the 94 level, which I believe we kind of failed to do, giving you more kind of confusion to which way this could really trend.
Yeah, and I remember, Matt, too, we were talking about like 92.50s.
Yeah.
And a little bit that seemed to get some buyers supporting that.
Yeah, I remember I was just brought up my executions. I bought at 92.42 in this pullback. It's like right in here. Thinking, okay, if this is a dip and rip, like this is going to be the major pullback, the test under VWAP. These are the prices I want to be in. And then if you want to skip ahead, maybe like 4 or 5 minutes, I think. It's just going to like consolidate for the next couple minutes, and then it
This
tries
is
to make
where I
it.
got in. Yeah,
Yeah.
I got in on this wedge. And then I think this is actually very close to the dropout, the breakdown of this wedge. But at this point, it's wedging right below VWAP. It's looking like it could break out above 94, above VWAP. And watching to see if we can get above 93, above VWAP, and then have some volume come in. But that's not what we're going to see.
You want to skip ahead a couple of minutes again? So what's going to happen is we're going to kind of pull back a little deeper than we were expecting, and it's going to push to $94 again, which really should be a major breakout if we're testing that level again, holding higher. And yeah, so you can see that dip there stops out our initial long idea because it just breaks down under 92, but then quickly rebids. And I'm thinking, okay, this should be the higher low. This should really break through 94. And then I believe we get a move through 94 and then just a quick stuff back under the level and more chop. And so trying to buy this breakout is definitely gonna give you really bad prices and quickly stop you out.
Looks
That's
strong.
exactly what I do.
Looks strong.
Exactly. Now above VWAP, we're getting some volume come in.
Oh, good. That'll definitely make it work then.
Yeah.
So this is gonna be a big make or break point for this trade. I mean, it spent 10 minutes, 15 minutes now off the open trying to break either way. It's looking like it's getting a tighter consolidation. It's holding under the level.
Above 94.
So it should really go here. It should really break up towards $95 here, in my opinion. If that accumulation was real, people should be buying it higher, really pushing it up, especially for a dip and rip setup. That 5 minute should really continue.
I think that buy in the wedge on the long side is an okay trade. I mean, I wouldn't call it a great trade, but I think that's an okay trade. I think that's the first trade I've actually seen that I might take. It's at the highs, good earnings.
Yeah.
Some time went by. You know, it traded between 92 and 93. It looks like it wants to try and go higher. I think that's an okay trade. You know, your stop's going to be below 92, probably. Well, no, that's a little bit far. I'm sorry, it's trading between. It's not as clear
90.
It's trading between 90 and 90.
Trading between like 91 and 94. Like
Yeah.
91's the wick low.
Sorry, I couldn't see it here on my screen. But yeah, I mean, the real stop is below those wicks there. If you can show, can you see the wedge? And then the real.
This one.
No, before that.
No.
After that, sorry.
The one where we got stopped.
Yeah,
out.
so that red wick right there, like like below there, that's like the real stop, which looks like that's 90.
90, like 2, 91, 90.
I think that's kind of, like 90, below 92, below 91.50 is probably a real stop for that momentum to the upside. That's an okay trade. I think I'd take that trade. You sort of buy it around 92, around 92.50, maybe buy a little bit more when the wedge breaks. Volume gets a little bit better. I think that's an okay trade. I think I'd be tight with that, and that's not going to work, right? That trade's not
That's what happened to me. I was a little too tight on it. I got stopped out at like 92.20 when I had a 92.40 entry, just because it pulled back a bit more than we were expecting, stopping us out. And then yeah, we're gonna push to the upside, quick push over $94, and then you would expect it to pull back and hold there, and it just flushes back to VWAP, and then gets back down to this $92 area where it consolidates and chops around for like the next 20 minutes of the morning. So that'll go to show. You can skip ahead now, Tim, if you want, just show like what the pattern will look like.
Yeah, so we could see this flush, just complete rejection of 94. That stopped me out.
Just brings
And
us
then-
right back into the range.
Exactly.
And I have a rule that after trading a stock and it tries to make opening drives, and if it breaks out of the range, and then comes back in quickly or an uncharacteristically way, then I want to stay away from it for at least the next 20 minutes.
Great
to half
rule.
hour.
Breaks out of the range. It shouldn't come back to the middle of the range. And if it does, trade decision. Great rule. Because if it's going to be really strong, it should just go, pop, pull in. There should be aggressive buyers protecting that former resistance area. Resistance should become support. If it's going to be really, really strong, they should hold it above the breakout area. Totally agree with you.
Yeah, and in a similar way, I looked away. We just consolidated here. But I would say, like, if we're thinking about what told us that this wasn't trading clean, I would say the first notice was this retracement, the red to green move, where it just couldn't pick a direction, strong opening drive, then completely reversed, then reversed that. And then the second thing was that flush, that rejection at 94.
I think that's a good trade on the long side. I think that's a good trade on the long side. That wedge pattern, playing for the upside in a strong market, strong stock. I think that's a good trade. It didn't work, but that's a good trade. And then I think you got to move on.
Yeah,
Or say to yourself, I have to see a really big level develop. Maybe this 92 area is going to become a really big level it develops. And I'm only now going to move to A+ trades. So I got to see this 92 become a really big level, or maybe 94 will become a really huge level. And time's going to have to go by, and it's going to have to get below or above those areas for me to be interested in a swing trade. So I'm moving to, it's not working what I'm doing, and this is a little bit choppy. Maybe it will work, maybe. And maybe this is a good setup, worth considering if there's just a super technical level that gets set up intraday. Super clear, big battle, 92 or 94, something like that. I'm shifting my gears to, I'm only in it for those types of trades.
Definitely. And that's pretty much exactly what we see in this for the next 10, 15 minutes. 92 really develops as a big level before it can trend higher back to 94. Then it makes a move into 94, which is still level, and then pulls back and consolidates a while again. So yeah, you can see.
We do then get a breakout that does develop. Like it just started here.
Yeah, I don't think we need to watch the breakout because it's slow. But I would skip ahead to another 10 minutes and show this breakout pulls back much steeper than you would expect for breaking out of the range again. Comes back into under $94, I believe. Yeah, here it's 93.30. So that would still look like a kind of rejected breakout to me in a way if it's pulling back that steeply, but on a longer time frame could be accumulation on the 5-minute. But from a day trading perspective in the morning, these are just not the types of setups we want to be involved in, and we kind of knew it wasn't trading cleanly from our earlier trades, and it's why we stayed away from this eventual breakout of the wedge pattern.
Good, and just like you want to have a playbook for trades that you want to take that are A+ setups in your trading business, you can develop a playbook for the trades you don't want to take. And you can, it's perfectly fine to say, if I start to see these characteristics, if I start to see these variables in a particular stock, I'm going to stay away from it. It's not worth my time. And be specific, just as specific as you are with your playbook trades. I'm going to be in a breakout trade if XYZ 1, 2, 3 happens. You can say to yourself, I'm not going to be trading a stock if ABC 1, 2, 3 happens. And it looks like you guys are saying this is one of those stocks. It's too choppy.
Exactly.
Yeah, I mean, we get better when we do more of what we do well, and we do better when we eliminate what we don't do well, and this could go on the bucket of eliminating what we don't do well. But super important to be able to say, I say this to myself all the time when I'm trading. Top traders say this all the time while they're trading. It's just not acting the way that I want it to, and they move on.
That makes a lot of sense.
That's definitely something to think about moving forward.
Now, I mean, the other thing you do want to think about is, I was talking with Swang today about JKS, and Spencer was chirping out right on the open. You guys are remote. I'm in the office today. with a couple of the guys. Spencer was in the office today, and Spencer was chirping out today about how JKS right in the open showed weakness. And then it showed that opening drive weakness, pretty deep red candle, pretty good volume that came in. And then so it went to the bottom of the range, and then it went all the way to the top of the range. But then it made a new high and then failed, and then made a new low again. So when it made that new low again, it really started to look like risk was off on this particular trade. And there's a bunch of guys that have been trading this in different ways. Buying some puts is one of the ways that Swang was attacking this. And during one particular moment of the trade, it went up a little bit more than Swang had hoped. But I was chatting with him on GChat. I'm like, no, this is good, actually. Like, this stock has been strong. We want, actually, a particular time when people get excited and think they're going to start buying this up again. We want there to be a little bit more of an overextension. And if we can see that overextension and then it turn over, we can really add to our position and hit it hard right here. And so I want to make sure that we make the distinction. I say that because I want to make sure. And so I happen to say to Swang, I'm looking to short it right here when it looked pretty hot into an up move. It was still below VWAP, and his thought process was he just didn't like it. It was getting too strong for his taste. But I said, look, this is good. We want this. Let's see the rollover here. And we had that conversation, and it ended up actually rolling over where I thought it was too hot. And he was able to stay on the trade and see that with me as well. So you do have to make the distinction between, hey, this is a stock I don't want to be in, versus this is a huge opportunity in a bigger, longer term trade. JKS can pull in 30% and still be a terribly strong stock. And I can use these overextensions to add to a position, like in JKS when it got too hot, to add to a winning trade. And so you want to make that distinction with your trading. Sometimes the craziness can be really good for us if we learn to harness that well. But it's got to be in the direction of the trade. This wasn't an example. So good.
I'll read the questions we have in the chat. Mike, can you talk about what is the meaning behind of the spread getting tight or wide on the tape, and what does it indicate?
I think you want the spread to get tighter. That indicates that this is the moment where it should break. So when the spread is wider and then it narrows, the move following that narrowing, I add more significance to that because the buyers and sellers are coming together, and there's going to be winners and losers, and I want to follow the winners. Good to recognize that. That is a very savvy observation you're making about a particular stock, and a very savvy observation you're making about the tape that can give you really good information.
Then we had one more kind of similar question from Kyle. Do you think that setting some type of rule in regards to the spread of a stock may be beneficial? Example, avoiding names with 30-cent spread. There's a chance people might have edge in the spreadier names, especially when they tighten up. So what do you think about that?
Look, I think it depends on your experience level. It's harder to trade a spreadier stock when you're starting. I think you want to start with stocks that have tighter spreads at the beginning of your career. I think you want to start with stocks that are cheaper in the beginning of your career. As you gain more experience, you can trade more stocks that have a little bit more of a spread and that have a higher price. So think about that. Easier to trade stocks that have tighter spreads and are cheaper. And then I think of it as, you want to think about your trading career as in steps. You can't climb the mountain other than one step at a time. At the bottom of the base are the stocks with tighter spreads and cheaper prices. And as you succeed with that stage of the mountain, then you trade stocks that are a little bit more expensive and open yourself up for the possibility to trade stocks with a little bit more of a spread. And then after you conquer that, you take the next step up the mountain.
And I'll just mention, in my experience as someone who's new on their trading journey, that I've noticed it is harder, or feels harder, when you're starting out to.
By the way, Swang's chatting me up about how he's covering into this JKS. I don't know where it is. Can you guys see that? Where's JKS right
It's
now?
at 74 now.
Oh, jeez. All right, we should wrap this up. Let me go do my thing with that.
Sounds good.
I need to go cover. All right, a little bit at least. All right, thanks guys. Hey, go ahead and click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. And please take the time to add your feedback in the comment section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at SMB, train and trade well.